Now we're going to turn our investor eye onto innovations that are going to keep the lights on as we navigate climate change. I'm pleased to introduce our next two panelists who will be talking about blockchain investing in natural resources. James, or Jimmy, Vallee is the founding partner and managing director at Valhil Capital. Did I say that right?
You did, yeah. I go by Jimmy. You know, my creditors call me James. My friends call me Jimmy.
Okay. We'll call you Jimmy then. So, so Jimmy is the founding partner and managing director at Valhil Capital, and notably, he is the underwriter of the first NFT securities offering through Valhil NFT One, and he's the publisher of Astrolight Media. Prior to founding Valhil Capital, Mr. Vallee enjoyed, or Jimmy, enjoyed 2 decades as a partner in 3 global AmLaw 100 law firms. Wow. He's been advising public and private companies, advising master limited partnerships, advising investment banking firms and sovereign wealth and private equity funds in this mind-blowing more than 100 billion worldwide M&A transactions. The M&A he's advised includes such mega deals like OGE Energy and its $11 billion midstream joint venture with CenterPoint Energy. He advised Continental Airlines and its $8.5 billion all-stock public-to-public merger of equals with United Airlines. He also advised on Micron Technologies joint venture with Intel and the Atlas Pipelines $1.85 billion acquisition of, I hope I say this right, Anadarko Petroleum's Cheney Dell in Oklahoma and Midkiff pipeline systems. This is a mouthful. and he presently serves on the board of directors of several of the Valhil portfolio companies. Wow. Scott Minett is our other speaker on this panel. Scott is the co-founder of Deltawave Energy and the president of Valhil Capital. Prior to Valhil, Scott was executive vice president of a natural resources company organized under the Dubai International Financial Center in the United Arab Emirates, where he led a team overseeing the physical and financial trading of crude oil, natural gas, coal, biomass, metals, and other commodities. He also oversaw the development of energy terminals, maritime oil bunkering, facilities, mining, and industrial projects. You guys have been busy. He's been arranging the financial and funding for all of these activities. And Scott's early career was focused on operational logistics with emphasis on multinational trading transactions. Scott also serves on the board of directors of several of Valhil's portfolio companies. So with their massive and incredible experience, I'm going to let you take it away, Karim.
Thank you, Shelley.
You're welcome.
Shelley, thank you. Can you make an intro for me that I can catch up with them? Because I feel completely inadequate now.
Karim, you just got to be old. I mean, come on. That's all we're talking about here.
I am old.
Run out of time on this panel.
Right, I take the whole panel.
You will. There's.
I'll have to come up with the short form to send you next time. Sorry about that.
Thank you. Thank you, Scott. James, you know I'm fans of yours. I'm fan of what you do. I'm fans of Deltawave. You know this. But interestingly enough, we had a panel earlier today that was titled, Will Blockchain Change the World? And given that backdrop and what you're doing in energy, give us some of your thoughts of where we are today, what you've seen the challenges in the past, and where we're heading in the near future in terms of and just following on from Craig and Nick and Jeremy, that is one sector of natural resources, and things are changing there. That's a credit market, a digital asset sort of environment that's built on an exchange or will be built on an exchange. Not so much about the technology that goes behind companies that are building environmental impact solutions. So walk us through what your thoughts are about these disparate but congruous topics that we've just talked about.
Yeah, well, Kareem, Look, I think all of this, if you look at it and take kind of what we like to do is just take a step back and kind of see the playing field more from a global landscape, you know, because I mean, that's just what our experiences are. You know, I've traded commodities all over the world, so you kind of get a different viewpoint, a non-American viewpoint, if you go and you look at the way these other markets look at this. But at the same time, we're seeing this technology that's going to change the world, and we believe it fully that it's going to change the world and is changing the world. But at the same time, you've got legacy businesses, especially in the natural resource spaces, that they don't tend to keep up with technology. They tend to adopt much later. And so kind of what we've been out here doing is taking all of our experience and our relationships around the world and building these next generation businesses. But I'd say not so much leading with the technology. We're leading with the traditional way of doing the business, right? A natural resource company should cash flow. You should have the right licenses and registrations and partnerships and logistics and kind of all the fundamental things of running a business properly. And then what we do is we keep a very close eye on what's going on with the technology, and we see how we can plug that into these traditional businesses and give us either a cost advantage or whatever competitive advantage it gives us in the marketplace with our competitors. And we like to do all that with a fresh balance sheet. We do it all kind of like we've talked about in the past. We do this all in-house. It's just our group going and doing these things and building this business. And there's reason for that, because like I said, the legacy guys tend to hold back. They're not pushing forward like we want to do in this space. So somebody's got to get out there and kind of break the barriers and go build these things and kind of show everybody how it works. And then, the capital will flow in behind it, and these will become the new, superstars, the new Glencores and Trafigura's of the world that will pop up out of these new technologies and traditional businesses coming together.
I think we have to back up just a little bit because we've had this conversation, and I know a lot of what you're talking about, but there's part of the audience that probably missed that genesis of what it is that we're actually addressing.
Mhm.
So if we talk about the businesses that you're building, let's start from the beginning of how we started that and what we wanted to achieve and where we are today, because I think we missed that part.
Right. So like with Deltawave, what we've set out to do, it's a traditional oil and gas midstream company. We're building the ecosystem that would allow for these blockchain technologies to utilize the natural resources and create these efficiencies we're talking about. So that's kind of the underpinning there. We also have our commodity trading business, Navix1, which we've been basically building that up the way you would any traditional commodity business. Like I said, what we've been doing is getting the licenses, the registrations, the commodity agreements, the partnerships, the logistics, all that kind of meat of the business together. And then what we've been doing in these countries is providing thought leadership on kind of what blockchain can do, what tokenization can do to create these efficiencies. And then we're plugging these things into our businesses and showing the market what those efficiencies are. I think the writing's on the wall. You don't have to make this too complicated when you just step back and look at it. The world is tokenizing. All asset classes are coming on chain. So when you take that and then you see the legacy groups in your market that are holding back, their resistance to change, and there's a lot of demographics involved of why they do that. But we're just plowing ahead. We're taking these competitive advantages, and we'll just keep growing our businesses that way. And then, as the world kind of accepts these things and more people realize what's happening, then they'll just flood in behind the guys who've been building these next generation businesses. It's no different than what happened with Apple or Amazon or any of these companies, right? Amazon was selling books, right? They just used the technology to be more efficient and have a bigger and broader base because of it. And once the world woke up to that, Amazon became Amazon. And I think we see that same opportunity in commodities right now. You look at our competitors in the space, and they've been around for 40, 50 years. That's typically the cycle, the business cycle that those companies last. They're kind of at the end of their run. They've had a couple of good years the last couple of years, but they also have a lot of issues, right? They run off of thin margins and credits from their bank. The credit's being pulled back from the bank. Interest rates are going up. They're going to have a tough time as we move forward here. And there's a real opportunity for groups like us to adopt technology, to position ourselves correctly, and take advantage of what's going on. And that's generally what we're doing.
Jimmy?
Yeah,
so yes, I'm going to pick this up from what Scott just said. Was interestingly enough, we've just had conversations. Matthew Lemerle was on a little bit earlier on, a couple hours ahead of you. And we were talking about, just like what Scott said, there are certain legacy technologies that will start to wane in the efficiencies and efficacy of where they're playing. And that generally is like a time period of 2, 3, 40, 40, 50 years. Like Amazon now is Amazon that was old. And unless they reinvigorate and do something differently, it'll be left behind a little bit. But yeah, that's an extreme example. I mean, they've got, they keep doing wonderful things. And when you start to look at what you're doing, the natural resources sector, that has really never been innovated on, or not innovated on enough.
Right.
And so when you start to look at the emerging technologies that we're looking at, whether it's blockchain, digital assets, tokenization, walk us through just a sequence of events that will change this industry. Now, I know you guys are based in Texas, and how are your legacy businesses responding to what you're building to use all these new technologies? So walk us through the technology and how they're responding to that.
Mm-hmm. So there's a lot going on and a lot to unpack in that question. I'd say our thesis in incorporating blockchain into our various businesses was much like, as Scott was talking about Amazon. This is a massive paradigm shift that will affect all industries in the way things are accounted for, the way people verify veracity in what's being accounted for. It's the type of thing, if you take what's happening with FTX, or you go back and, more of my vintage when Enron failed in the early 2000s, if their financial information, once audited or whatever was published to a blockchain, it would have prevented some of the shenanigans that took place, this kind of off balance sheet or creating phantom assets and bolstering the value of the firm with those types of things. So we've got this kind of paradigm shift coming through with blockchain and the way contracts will get done, the way KYC and AML is going to get done. I mean, a lot of what Scott was describing in our trading business is really KYC, AML type activities, right? They have to know that we are licensed in the various jurisdictions to be able to mine, transport, export, import. You have to connect all those markets. It has to be papered up in compliance with law. Well, in a lot of the markets that we're in, which are emerging markets, they really don't have that type of capability, or they haven't done that type of thing historically. So we're having to almost bring a more, thorough regulatory environment into those markets and help them. But once those things are done, all those things can be recorded onto a blockchain and even placed into an NFT, and the NFT could then be traded around the different participants in that market, and they know, oh, this is Navix One. We can pull down the Navix One NFT for their exporting gold in Nigeria, and we can see that they're all papered up. That makes our customers in Dubai, Europe, London, those clients become more comfortable in dealing with us because they know things like, maybe there's no child labor involved. There's certainly, if carbon becomes something that you have to, offset or whatever, those types of things can be documented, put on a blockchain and verified independent of what someone's just telling you, or even looking at their financial statements. So anyway, it's a long way to say this is all going to fundamentally change really the kind of back office accounting infrastructure of all firms, we believe. So we want to get ahead of that. The way the legacy oil and gas market is responding is exactly the way the legacy banking system is responding to the emergence of digital assets and being able to settle, in near real time with digital assets, and also have that KYC AML type information stored on blockchain and tokenized and traded. That it's all an elimination of the middleman, or a making the legacy system dramatically more efficient than it has been. So there's a lot of resistance. Layer that into the global, the macroeconomic landscape of, we're basically in World War III, right? We've got the problems with Eastern Europe and Russia. We've got China. We've got the BRICS nations coming together and forming a currency bloc and moving towards their own international reserve currency to trade these things like oil and LNG, natural gas, things like that, gold. It's a very, changing rapidly, difficult time to navigate. So much so, I mean, we've never, certainly the team here has never faced anything like this in our lifetimes. And the biggest impediment isn't really the convincing the participants in the legacy oil and gas trade or banking trade to get on board. I mean, we kind of see ourselves as the universal translators of helping them. We can speak their language and we can speak the blockchain language as well. And we can help them navigate onto this more efficient technology. The problem is the government. The government is really seems to be purposely keeping the rules unclear. They are resisting the change. There's probably a lot of reasons for that. But that is materially slowing down the adoption, the investment activities, and all those types of things. Those are the real challenges right now. And until we have, more sophisticated, younger, smarter people who are taking the reins, I don't know this could change. Short of some, macro cataclysmic event, that it's going to change.
So here's a question, and Scott or Jimmy, you can take it up. So, knowing your background, the lawyer, knowing some of the cases and some of the litigation, on the various things that you've done in relation to digital assets and various other aspects, knowing that the industry that you work in, oil and gas, particular natural resources as a whole, working in emerging countries where one department may not be talking to another department and there's no communications between them. That, not to say that doesn't happen in the US, but even more so perhaps in the emerging nations. And I'm going to lose this bet, hopefully, or not, had a wager with some folks from Australia yesterday saying that the tokenization landscape, they suggested 20 years when it'll become fully efficient and transparent and usable. I said it was going to be 5. And so hearing you today and having made that wager and thinking about the problems, will we actually see in the next little while, or what's a time horizon for things to and especially given what's happened with FTX, but that's another matter.
Right.
What is a realistic time frame that we will see real adoption of the technologies that we're talking about in a fruitful, efficient manner that doesn't exhaust you, right? That doesn't exhaust investors.
I guess I'll keep. So it seems like adoption is accelerating, especially outside of this country. So in the Middle East, in other markets that were involved, even in Africa, there's a desire to kind of leapfrog the old correspondent petrodollar driven system and move into a system that I think we all believe, if done appropriately, and this ties into the tokenizing of natural resources, really. But it's like, we talk a lot about the cocoa farmer in Africa who doesn't have a bank account, doesn't engage in the current financial system, but they trade with the mobile minutes on their phone. They all have phone, right? And this is the type of thing that really makes us gravitate towards a technology like the XRPL, because of the interoperability of being able to take that value that's in this other digital form and flip it into another type of value that they can trade with. And if you think about how that would evolve, first of all, it's going to, as I said before, start to push a lot of the middlemen out of the market, because they're not needed in that same way. You can have people like us, more international traders, dealing directly with that person, the local farmer, and they're probably capturing more of the value in that whole trade. So maybe they make $1 a day and they start making $3 a day. Well, you've just 3x'd their income, and all of a sudden they live on $1, right? And they can start to use that extra money to start buying tokenized securities and Link2, maybe off of Link2. It's like they can start doing other things with their money, and it will lift up. So back to the real question is, how long is all this bull crap going to take? I think you're right. I think so that's 2027. We're acting as if by 2027, if you don't have a significant market share, you're not going to be in the market. And so the time is now to be making the investment, building out the systems, and developing all the relationships, and getting all the licenses and all that kind of stuff, because there will be no more blockchain market for companies on an enterprise level to truly grab and participate in. Those are my thoughts.
Yeah, no, Kareem, I think 2 years ago, I probably would have said this may take 10, 20 years to build out. But what's happened in the last 2 years has dramatically accelerated this. And you have to kind of understand what underpins global commodity trade, and it's the US dollar. Okay, so as the US dollar has, and the US dollar it being the underpinning of commodity trade, is how the US has had, and the Western countries have had so much influence throughout the world. I think what's happened in the last year or two with the strengthening of the dollar, with Ukraine, Russia, the rest of the world has woken up and said, we can't participate like we did before, because it's crushing us, right? Like the African farmer we talk about. Right. Yeah. He lives off $1 or $2 a day. If now his food has gone up $1 that day, right? He's just going, well, I can't operate in dollars anymore. And so what's happening.
Talk about how we're seeing that flow through the cocoa market, for example.
Right. And so what's actually happening is, so then you have these governments stepping in the cocoa markets in West Africa. The governments have stepped in and said, we're going to put a floor on our export price. Well, that floor is higher than the London exchange price. Okay, so now you have this disjointment in the market that's going on right now because of all these changes, right? Whether it's the financial system, trade lanes, regulatory changes, what countries can trade with other countries. We just have a total pulling apart of the world supply chains, and they've got to be reconnected. And if you're going to go and do all this and reconnect them, you need to reconnect them in a more efficient way, because the technology is here, right? When we can offer, a counterparty that we're dealing with settlement, payment settlements, through these new blockchain, digital asset channels that settle 5 to 7 days faster, that means a lot. That means a lot to your working capital. That means a lot to, how you distribute funds out. And we think that's what will, by adopting these things and pushing forward and making these investments now, all the counterparties in the market are going to want to work with us, figure out how we're doing it. And then, like I said, the legacy guys in the business who've been, mega companies, Glencores and Vitals and Trafiguros of the world that dominate the landscape. They're all, based off of dollar denominated credit within their banks. And they're, you just go Google Glencore UK right now, and you'll see the lawsuits that they're in, the difficulties they're having. I think what you're seeing is, these behemoths that got built up in the business cycle, and then they're going to be winding themselves down, and the new unicorns are going to be built up off of that. And, we really think Navix One is very unique because, we have all of our experience. We have, as the CEO of Navix One, probably one of the best commodity traders on earth who's actually done this in these countries and built up, what were startup natural gas businesses into, tens of billions and hundreds of billions of dollars. So our team's kind of been through this before. And we're just, like Jimmy said, we're paying attention enough to the blockchain that we can speak both languages and put them together in a way that's simple and makes sense.
I want to add something that I think is a game changer is in our trading business is this concept of atomic settlement and being able to verify that the funds are present on each side of the transaction is going to be a massive propelling forward force in global trade. So when we hear the CEO of PolySign, which is on to obviously talk about that, we get super excited because that part of the due diligence, and then who's going to go first in the transaction, and how do you even thinking about things like how are you going to ensure the transaction and make sure that the performance occurs is all substantially mitigated just by being able to verify that both parties kind of have the capacity to perform.
Yeah, so that's pretty cool. So actually, so I was going to get into a little bit of maybe a challenging question topic, and you may not want to deal with it. Putting blockchain aside for a moment, and going towards the currency and exchange and regulations in that respect, and the 5 to 7 day settlement, that doesn't even make sense. I mean, I think it took less time for that guy to trade a block of salt and get his beans back when they shook hands and said, here's your block of salt, here's your bag of beans, done, instantaneously. And now, I mean, I have money in the bank, which you've taken custody for, and that asset sits there. I'm not asking for an LC or letter of credit, and I'm buying something. And you've got a counterparty bank that exists, that's open. Why should anything take more than a day? If that, it shouldn't, right? But as we see the implosion I think to separate the buckets, the FTX implosion was not an implosion of the FTX, of the crypto market or digital asset market. It was an implosion of bad management. or poor management or no management. But then you've got the uproar now with stablecoins and CBDCs all starting to come to the forefront. And how do you think that conversation is going to affect some of these bilateral trades on terms of the currency point of view?
Mhm. Well, I'm optimistic that the silver lining of FTX, recognizing that there are millions of investors that were on that platform who've been damaged, some of them bankrupted. I mean, it's a horrible, horrible situation. But the silver lining could be that it is a cattle prod to the U.S. Congress to adopt regulations. What I'm concerned about is that it's going to become, the kill and the fly with the bazooka type of a situation, and the regulations aren't going to fit the problem. So in some respects, and I've spoken publicly about this, we actually kind of had more clarity before the SEC sued Ripple for claiming XRP as a security, because pretty much the vast majority of the agencies of the U.S. government had already declared XRP to be a virtual currency. You had the Hinman speech where he had come out and said, if a platform is sufficiently decentralized such that you really couldn't have a single third-party promoter be doing the filings, because you got to, when you have a security, right, you have an issuer, and that issuer has to be doing 10Ks and 10Qs and 8Ks and all the various 34 Act periodic reporting requirements that are imposed on them, which really don't make sense in a network, decentralized network type environment. So with that speech, with all the statements that existed pre-lawsuit, it really was a better environment than when the SEC came in and through enforcement did what they did. So they've muddied the waters between what is a commodity and a security by doing that, right? They've refused, despite years. I mean, parties have been going to the SEC for years, at least 4 years. I mean, that's what caused Bill Hinman to go out and make the speech in 2018 that he made, was that parties were coming to the SEC saying, we need better defined when where's the bright line that this type of thing is a security versus this type of thing is a commodity, or just another type of an asset. So that issue, that bright line needs to be defined, and it needs to be, and this goes back to kind of what Scott was saying. This stuff isn't that hard. Okay. I mean, we have mused for years now on what the dividing line should be. And if we can sit around and be a retired attorney and some business guys and stuff and come up with a very reasonable framework, and you had Hester Peirce's 3-year safe harbor concept, where if there was confusion, give them 3 years to become sufficiently decentralized, or else they have to register as a security. That would give a new firm 3 years to get some traction, figure out, for the market to decide if that particular protocol is to be used, globally to become decentralized, or whether that's more of a fundraising, a process for that firm, right? So it boggles the mind what the SEC in particular has done. Now you even have the CFTC come out. You have senators coming out saying that only Bitcoin is a commodity, and there's everybody has an agenda on these issues. We can't forget that. Congresspersons are lobbied by special interests, and they go out and they speak on behalf of those special interests, and we can't lose sight of that. So we really need common sense, pragmatic regulation on this space. We're certainly happy to throw in our experience, and we've submitted an amicus brief in connection with the Ripple matter, trying to lay out things from our perspective. So the silver lining could be we get regulation quicker than we would have. The thing that happened at FTX is no different from what happens in every accounting scandal that, in fact, there was a video going around that was showing an Enron commercial from 2000. Enron was basically setting up an online trading platform that looked a lot like what FTX looked like in 2000. Okay. The problem was they had a bunch of off-balance sheet arrangements that they were using effectively. FTX is a little different. I'll make the distinction. Enron was using their own equity securities as collateral for a lot of the debt in these off-balance sheet arrangements. So when the company began to fail, the equity dropped, right? The equity value dropped, which then triggered more debt, which then caused more sell-off, and you enter into what we call the death spiral of a company, of an enterprise failing. It appears in FTX, it kind of comes back to the FTT tokens and the Serum tokens, which are an analog to Enron stock, but they at one time were traded. They were marketable across the the global ecosystem of digital assets, and they were on the books for, I think, even the week before SBF kind of threw his hands up and said, yeah, I've totally failed. They were still on the balance sheet collectively for about $5 billion. And now they're worth less than, those two assets are worth less than $1 million. So,
that's great. That's amazingly crazy. It was just like based on vaporware, and it just disappeared, just like vapor.
It disappeared. The real question, where did the money
go?
Right. Especially, what a phenomenal time that we've had, like these Twitter spaces, and SBF comes on and you got 1,000 people who are interested in the space and they're asking him questions. Just amazing. Never seen anything like that ever. But, one person did really pin him down and said, when I put in $20,000 to get Bitcoin, and I held my Bitcoin there on my account in the exchange, where did the Bitcoin go? Like, where
was it ever there?
Right. Or was it ever there?
Right.
Yeah.
And I think we're starting to learn that, if it was there, it was for what we used to call in the business a legal moment in time, and then it moved somewhere else. Right. Look, this is how, we're talking about, we don't want this reactionary regulation. Within the 6 months prior to FTX failing, he was before, I think, the Agricultural Committee of Congress talking about these overnight instant liquidation of hedging positions that was going to go into all commodities markets. And most of the people on the panel are congresspersons were saying, this is a good idea. This is an efficient marketsy type of thing. And I think you had the one CME CEO, I can't remember his name right now, but he was like, this would be a nightmare. If you asked a farmer in Kentucky, are you aware that you could go to bed on a Friday and be liquidated Sunday night at 2 a.m. and then wake up on Monday and have absolutely nothing? Is that acceptable to you? Well, of course not.
But so interestingly enough, two things. One, I want to have you, so we've got a bunch of people here on this call, and obviously it's going to be socialized, so a lot of people will see this after this conference. But if you were to do a call out for, and we've got to go because the next panel is already here. And interestingly enough, Michael Casey is here on the next panel, who CoinDesk with Michael Casey broke the story on FTX the first time. So he's here as well.
Very cool.
He'll come in and say hi to us. But if there's a call out that you want to make to our people here today and to the people that might be listening to this later, how can they work with you, help you? What is it that you're looking for at Valhil Capital today?
That's a really good question. So we're looking for like-minded partners all the time. And we haven't really gone out. We were like the firm you had on before. We're a family office. We haven't gone out and raised money, among the accredited investor class, done a 506C offering or anything like that. But, that is something we will probably embark to do maybe in the next year, is actually set up a fund. So anyone who'd be interested in that type of thing or want to work with us in any level, be a partner, do whatever, we would focus that on commodities and venture investing. So, Deltawave type thing, link to type things, Uphold, on those types of investments would be the types of investments we would be looking to make, as well as commodities, really fully baked, fully collateralized commodities trades, is where kind of we think we can add the most value. And then on the regulatory side, people, we're more than happy to lend kind of our experience in securities laws and commodities trade and all that stuff to help figure out where that bright line should be and inform Congress on how it should be. We're at a precarious point in the global economy, and we believe that allowing digital assets to thrive could really be a game changer for America in particular. We just need some real common sense, cool-headed, pragmatic regulation, and we're happy to participate in defining that.
So that's great. So you've that I like that. I should have asked it earlier. This is the call out. Valhil Capital, I've known them for a while. What they're doing with Deltawave is quite amazing. Your strong background in the securities regulation and the law hat is amazing. And then your trading experience, not only in the US, but globally, Scott, is something that we need to pay attention to. It's not an easy job. People think it is. It really is not. We heard from the previous panel that carbon credits, I said, like, why can't I just go buy one? Well, okay. Can you go buy FTT? Sure, go ahead, buy it, see what happens, right? You're
Right.
left holding paper, and that's not tradable. Not yet, anyways.
Mhm.
So we do appreciate your time, James and Scott. Thank you so much.
Thank you,
I hope
Karim.
you've got the
Great to
audience
see you.
that- Thank you.